Namaskar, and a very good evening to all the esteemed members and participants. On behalf of Karnataka State Chartered Accountant Association and Direct Tax Committee, I extend a warm and hearty welcome to each of you to this highly anticipated webinar on reassessment provisions, recent controversies, and developments. At KSCA, our mission is to empower the CA fraternity with timely knowledge and practical insights, especially in areas where the law is evolving rapidly and complexities are abound. The provisions governing reassessments under the Income Tax Act have witnessed significant changes and interpretations, posing challenges for both taxpayers and professionals alike. Today's session is aimed at demystifying these provisions, understanding judicial trends, and equipping ourselves better for advisory as well as litigation rules. We are grateful for the continuous support of our members and encourage all of you to actively engage, ask questions, and make the most of this knowledge sharing platform. It is now my privilege to introduce our distinguished speaker for the day, CA Naveen Khariwal sir. Sir, hearty welcome, sir.
Thank you.
A third generation chartered accountant from a family steeped in the profession. Naveen sir is a renowned expert in the field of direct taxes. He is a partner at the prestigious firms Messrs. H.C. Kincha and Company and Messrs. H.C. Kincha and Associates. His insights are backed by his invaluable experience on multiple expert committees, including the Direct Taxes Committee of ICI, advisory groups of Income Tax Department on e-filing and CPC reforms, and many more. Having addressed over 50 ICI branches across the country and many professional forums, his sessions are celebrated for clarity, depth, and practical relevance. Naveen sir is not just a speaker, but a thought leader who has moderated and participated in high profile tax discussions, including on reassessment provisions, which is our subject today. We are truly fortunate to have him guide us through this complex landscape today. With now, I invite Naveen Khariwal sir to take us through today's session. Over to you, sir.
Thank you, Deepak, and thank you, KSCAA, for the invite. So, the topic given to me by KSCAA today is on the reassessment, and they have also added, two words to it, stating that it is about recent developments and controversies. So, let me straight away begin with the controversy itself. Yesterday what has happened? So raids have taken place all over India on this 14th of July 2025, targeting all individuals and entities for making fraudulent claim of deductions, exemptions under 1013A, 80GGC, 80E, 80D, 80EE, 80EEB, 80G, 80GGA, 80DB, the list goes on and on. So my dear friends, these do not think that it happened in a day or two. This has been taken place by the department since the last 3 years. And first they invited from 5 lakhs and then 10 lakhs. And then, the limit increased. And finally, they decided to, conduct raids. Now, what has happened is, as a result of this search, what has happened, approximately 40,000 taxpayers have filed their updated returns. If you see, this is what uh, the note which has come out in the public domain says so. 40,000 taxpayers have filed update return in the last 4 months, voluntarily withdrawing the false claims. They are telling false claims to the extent of 1045 crore. So those who have filed, very good. We are very happy 139.80. In case those who have not filed, they are waiting for this notice under reassessment 148 and 147. You have to be careful. It also comes with a added cost and penalty as such. Now, so therefore, this 150 premises, where the searches took place, basically verification exercise it is called, around 150 premises where it took place. Now we'll have to wait and watch as to what will the stand of the department and what else evidence they have found. So be careful, my dear friends. If the situation is sorted out in this updated return 139.8A, which is 70% now. It started from 25%, then 50%, then 60%, and I can file an updated return for even 21, 22, unless I have received a notice under 143.2 and the other acts under which will bar you from filing the updated return. Another, the controversy, what the people are asking is what about foreign asset and income? Sorry, sir. Nothing would be reopened under 148 and 147. And give you clarity, it will straight away go to the Black Money Act, UFIA 2015. They will straight away take you under section 43 and 44 of the Black Money Act, where they would levy a penalty of 10 lakh rupees. So what are they telling? Under foreign asset, this FAIU wing is there, all of you know, Foreign Asset Investigation Unit. So foreign asset investigation, what are they asking? They are asking three things, be careful. One, they are asking disclosure of foreign asset in the return. Hey guys, have you disclosed or not? That is first mistake, you have not disclosed. Fine. Resident in India, having any asset abroad. Disclosure. Next comes, they are going to ask the source. And then the income. I have declared income, sir. Absolutely no problem. I have declared income, fine. Then they will tell, where is the disclosure? You are not disclosed the asset as such, but you are declaring the income, fine. Not declared the income, not declared the the asset. Now the source comes into picture. For example, immobile property. Mr. Kamlesh has purchased immobile property in US, say San Francisco. He has declared the rent received. Resident in India declared the rent received, fine. But unfortunately, he has not disclosed it in the return. So there is no disclosure, but there is a disclosure by way of income from house property. That property at USA, that property at USA is declared, no doubt about it. But in the income from house property schedule. So the question, therefore, many of the chartered accountants wanted to know whether 147, 148 could be levied and whether could I file an update return, etc. under 113. Any detail. So foreign asset, what the department is telling, as of today, they are telling, I am not going to invoke provisions of 147 or 148, but I would straight away take Kamlesh to your UFIA, 2015 foreign asset, and I would try to levy a penalty of 43 and 44. 100% the department has told that even if you file a update a return, what is happening in department today, I'm telling you ground level, if you update a return under 113.8 also, they are telling, Mr. Naveen, when did your client upload the return? After the notice is issued, after you got the notice from FIU, then only you filed the update return. Yes, sir, no doubt about it. Income I have declared, I did not declare the asset, I have got the source. Mr. Kamlesh purchased an asset, house property in San Francisco. What is the source? Say his salary income, and he took a loan in San Francisco. So salary income is there and loan is there. Very well declared, sir. I filed returns in US also based on my resident status as well as in India. But unfortunately, I did not declare in the Indian return. So department would levy a penalty of 10 lakhs on him because limit is only 20 lakhs, sir. Say this property is around about 5 crores in US, converted into Indian rupees. So now the department levy 10 lakhs fine under 43 and 44 of Black Money Act. He has to only file an appeal. But definitely, the tribunal, you can get good relief. You will get relief because it is unintentional. It is unintentional because I have declared the income. I have also declared that property in income from house property. Point number 3 is I have declared the income plus I have the source. I have the source, and that income, the source, the connected income is also declared. Moving forward, sir. Now, yeah. So now we'll just make a comparison, sir. There is a comparison from 2023, 24, 25 Act. Now again, people are asking me, questions about Rajiv Bansal and this Ashish Agarwal case. Very, very simple, sir. Why do you want to break your head? My article, Mr. Pakshal Jain, I'm telling you the name. He has brought out a brilliant formula here. I'm going to share that formula with all of you. You put that formula, all of you, and then you put those dates, and then you'll get the answer. Why? They are asking me surviving time limit. What is Ashish Agarwal all about? Sir, Ashish Agarwal is all about 20th of March. What happened? Because of the COVID pandemic, the due dates or the guidelines were extended. Timelines are extended. Fine. So what is the period from 20th of March 2020 to 31st of March 21? Which are the years which are falling in that time period are extended? 3 notifications have come. One extended to 31st March 21, another up to 30th April 21, another up to 30th of June 21. Fine, sir? So what is that called act? TOLA. Relaxation Act. So TOLA came as an ordinance, then became an act. In TOLA, my dear friends, there is not only Income Tax Act, there are various other acts. One of the act is Income Tax Act. What is TOLA telling? I am merely extending the timelines for issue of notice falling between the period 20th of March 21 to, your 20th of March 21 to your 31st of March 21, 20th of March 20 to 31st of March 21, then extended. Fine. Where did the controversy start from? 13-14, assessment year 13-14, 14-15, 15-16, 16-17, 17-18. So 13-14 and 14-15, 6 years from the end of assessment year. There are now, as of today, from 21 till today, there are 3 sets of reassessments. What was the first set up to March 21, sir? Reason to believe up to 4 years, beyond 4 years, up to 6 years. Beyond 6 years, up to 16 years in case of a resident in India having foreign asset abroad. Very simple. When can I reopen beyond 4 years? My income undisclosed should have been escaping assessment at least 1 lakh and more. Up to 31st March 21, 4 years, 6 years, 1 lakh. Reason to believe. After 31st March 21, what happened? 2 months got extended, very fine. Unfortunately, what happened? The finance minister did not envisage a scenario and they passed a new reassessment regime altogether. Finance Act 21 came into play. Therefore, court after court, writ petition. I am introducing now a fictional imaginary character. It is called Amar Akbar Anthony. Now, as I proceed, my character will also grow. This imaginary fictional character called Amar Akbar Anthony. So Amar Akbar Anthony, what he did, he went and put a writ petition in a high court. Amar Akbar Anthony is a fictional. No offense meant to anybody. So they went and put a writ. What is the writ about? You are telling when there is TOLA, how can this TOLA replace the Finance Act 21? How can TOLA go beyond Income Tax Act? Absolutely no. See the arguments by the Attorney General Venkat Raman, superb. He deliberated in the most superb manner against the 30 learned advocates of all India. 30 learned advocates were there, and what beautifully he has deliberated. What is Mr. Venkatraman telling? 20th March to 31st of March, sir, TOLA time limits have extended. What has happened? Up to 21st of March, 4 years and 6 years. Moment I come into April, May, June 21, it is 3 years and 10 years. Then what you have to see is 1 lakh or more, and there it will be 50 lakhs and more. So it is neither, advantageous to the revenue nor advantageous to the assessee. I am not telling you to follow TOLA. TOLA is only for extending the timeline. But when I come to April, May, June, follow 10 years. Don't follow, that is 3 years and 10 years. Earlier 4 years and 6 years. Earlier 1 lakh, now 50 lakhs. So that is what they are telling. Only thing is what? Extended due date. So the matter went further, Ashish Agarwal. Matter went further in, pardon? Yeah, Rajiv Bansal. So matter went further in Rajiv Bansal. Then what happened in Rajiv Bansal? What they are telling, 3rd of May 2022, Ashish Agarwal has come. What did Ashish Agarwal say? If not, what would have happened, sir? 90,000 notices issued all over India. You want to tell them you escaped scot-free. Don't pay the tax. What about my nationality? What about my Indianness? You got 90,000 notices. You please escape scot-free. Don't worry. Don't pay tax. So 9,000 writ petitions, 90,000 notices. What the department, what the Supreme Court, beautifully argued by Learned Venkatraman. And I'm glad to say I could hear him. And in fact, he was invited by the KSCAA itself. He spoke in a very befitting manner. Anyway, so what has happened is, what they told, all the notices issued, original notices issued under 148 shall become show cause notices under 148AB, deemed notices. Then they told what to do. This will become deemed notices because that new regime kicked off from 1st of April. What was 148 earlier now became 148 ABCD. Today it is not there even 148 ABCD, sir. What is there? 148 A, 1, 2, 3. So at that time, what happened? 148 AB becomes deemed show cause notice. Fantastic. I am telling you, none of you have taken the stand based on Rajiv Bansal. Tomorrow itself, you make additional grounds of appeal. Nobody has tested the time limit based on Rajiv Bansal. I am telling you, you put this formula, put that. Tomorrow itself, you put additional grounds of appeal. I am sure many of the time limits should be time barred. So how to calculate that? We have given a formula. We'll discuss that also. Very, very simple, sir. So 148 AB or 148 original notice has come, sir. Put that as A. 148 now became 148 AB. Next. After that, immediately you put next column, 30th of June 21. Next, what will you put, sir? After 3rd of May 22, when Ashish Agarwal, was passed, thereafter he gave 1 month to the department. You please issue notices and 15 days time or 14 days time to the assessee to file your reply. So assessee will reply. So first column is original notice under 148, which became 148 AB. Second one is 30th of June 21. The third column is notice issued by department. Why? Supreme Court told in Ashish Agarwal, give the relied upon material within 1 month. I'm giving you 1 month time. Supreme Court gave a dictum to the officers, give the relied upon material along with the information or whatever within 1 month. So that will be the third column. They, by virtue of a notice, they gave one notice under 148B along with the relied upon material. What is the fourth column? Reply filed by the assessee. Reply filed by the assessee. Now, what is the surviving period next? How to calculate surviving period? Suppose, June 10th was the date of original notice, June 10th. So that will become the show cause notice, June 10th. What is the time limit, sir? June 30th. So June 30th minus June 10th will be 20 days. 20 days is the surviving period. Next, when my notice is received in the next year, notice is received after post Ashish Agarwal. Suppose we will take the example of, say, 20 days time is there now, surviving limit. Suppose, May, 3rd May it came. Suppose 31st of May, the department gave me the notice. June 10th itself, I filed the reply. So June 20th, department said, no, it's a fit case. So June 20th plus this 20 days, I need to add to that. So what will happen? July 10th. So 10th to 20th. So by the time, that is the time barring date. Before the department should have issued a notice. Else it would become time barred. Put this, sir. And if you have not taken, this is the Supreme Court second round. Wait and watch. We are also going to the third round. Why? FAO and JAO. You are telling me today, FAO has to issue notices. JAO cannot issue notices. Matter sub judice in Supreme Court. All Bombay Exaware matter. Exaware, Bombay High Court. Now, matter sub judice. Kankalar Reddy, Telangana High Court, matter sub judice. I will tell you even that we will take up that issue also. All matters are sub judice in Supreme Court for what? Whether the JAO should issue notice or whether FAO should issue the notice. Hats off to the advocates, sir, and hats off to the chartered accountants. How beautifully we are reading in between the lines. How beautifully we are reading between the lines. We are telling them, this is what is the skill of interpretation. None of them will have, sir, all over India, I'm telling you. These interpretation skills, we are proud to be from this fraternity. And we are proud to, contribute to the government exchequer also by way of our clients. And then I'm telling you, this interpretation can be made only by the chartered accountants or even advocates. So I am telling you this, my dear friends, the third round matter will go to litigation based on sanction. Department goofed up. When they came to the new regime means not your old regime and new regime, you would have claimed deduction and got refund. No, not that. This is new regime of 148. So when I came to 1st of April till 30th of June, you should have gone for sanction. And sanction is different authority, 3 years and 10 years. Earlier 4 years and 6 years, different authorities. There the department goofed up. They have not given correct sanction, correct approval, 151. There also you can win the case. Take that immediately, ground. Plus that surveying period. 100%, there is a good chance now. Now coming to that. So third round, JAO versus FAO is that one more the controversy, which is raging. And then we have got many high court decisions. But department is not ready to listen because they are telling, no, sir, matter is sub judice. They continue to issue notices by JAO. We continue to tell, no, sir, it is only the FAO because faceless assessment scheme. What does the faceless assessment scheme say, sir? 151 capital A. You have used all those words, automated allocation, algorithm. What is automated allocation? Automated allocation of officers, random selection of officers or random selection of assessees. So when the notice come, when they are telling faceless scheme, it has to come through this. Where the question notice to be issued by JAO? You may tell that there is an internal instruction or circular or etc. Can the delegated legislation go beyond the act? What is the act telling and what is the delegated legislation telling? Anyway, this also will go through, sir. Now, these changes which have taken place in 23, 24, 25, department made the biggest mistake, sir, 21. When what they told? I remember those days when I was an article and then we used to fill up the block return, block assessment. Block assessment concept was there. We used to fill up one form called Form 2B for block period. Block period was 6 years plus the period up to the date of search. So we used to fill those only in one form and one acknowledgement was there. Here 6 years plus date of search, year of search, again here. So this is the declaration by, your declaration and it is already filed returns. And the difference was we used to declare the income and 60% was the rate of tax. No surcharge, no cess, no penalty also. If I declare the income in the return, only one return, only one order. Then what happened? Department told, no. This is not simple for ease of compliance, etc. Then what happened? They shifted from block assessment, 158 BC, BD, etc. They shifted from block assessment to 153 ABC regime. So that 1st of April 23, it kicked off, 2003 till 21, 153 ABC. Then from what happened? From 21, they told, no, goodbye. I am removing 153 ABC. I will merge the reassessment and the search provisions together. So that was the biggest goof up they did. And then they realized enormous, so many red petitions, so many mistakes. What has happened is now Amar Akbar Anthony, I told you, legal character. Your Amar Akbar Anthony, he bought a site now. When Ashish Agarwal, he bought a site. Representation, all the cases. When Rajiv Bansal constructed the building, 1st floor, 2nd floor, 3rd floor. Now, Java for what will happen? Graha Pravesh will be done. Now, next what will happen, sir? Wait and watch. The new bill is going to come, sir, next 2 months. December 25, they want to make it 25 itself. By that time, what he will do? Amar Akbar Anthony will start renovation. So, do not worry about it. It's only a fictional character created by me. Now, coming back. So, what will happen? All search provisions, department went back. So, remember the cutoff date, 31st of August 2024. From 1st of September, again they are telling, no. I am removing all such provisions from the Reassessment Act. I am bringing back block assessment. So, all such provisions goes away now from the reassessment regime. So, now you know what has happened. Assessment year 1920, all reopened. And now we are all going to Koramangala or going to Central Circle, etc., etc. Now, who is, sir? It is a joint commissioner, additional commissioner is the authority. The officers are issuing notices, 143 to your 148, etc. A, and then they are giving you show cause. Then you are going to reply. Then they are going to say whether it's a fit case or not. It's an empty ritual. I am sorry to say it's an empty ritual. 98% of the cases have been reopened. Now, one chartered accountant came to me and he told, sir, my own wife's case, he took loan from Edelweiss. They took loan of 400 crores. They applied for shares. They got some shares in IPO. That shares they sold, offer short-term capital gain. They repaid the loan. So bank got it loan of 400 crores loan. Bank, now there is a concept of STR, CTR, etc. Suspicious transaction report. Bank will upload. So that information will go to department. It will go into Project Insight portal. It will sit there. They will take that RMS strategy formulated by board, risk management strategy. That is why Amar Akbar Anthony is prospering, sir, because of risk management strategy. These 400 crores went and sat in the risk management strategy. It became information suggesting that income has escaped assessment. That got fed into 148A1. He issued the notice. There's no question of conducting any inquiry. 148AA is out of the statute now. But do you think it should be outside the statute? 148AA is gone. B, C, D is there, which is merged with 148A, 1, 2, 3. But still you have to do conduct inquiry. Although 148A is out, without conducting inquiry, how did you do? When they call for reply, they replied, sir, I had applied for loan to Edelweiss. I got a loan. What did I do with the loan? I went and, applied for an IPO. I got so and so number of shares. Balance was refunded to me. That shares I sold. I offered short-term capital gain. But you have reopened my case. You are telling explanation is not satisfactory. That's all. And 400 crores additions are made. And 148 is issued along with 148A3. What is this? Total non-application of mind. So all those you are thinking, reason to believe has now become information suggesting that income has escaped assessment, non-application of mind, then without jurisdiction, live nexus, live link, tangible material, live link, nexus with tangible material, everything is still alive, sir. Take everything and now we'll have to again file a writ petition. So what am I to do? I have to go to Amar Akbar Anthony again now to file a writ petition now. I cannot tell him, you wait, participate in assessment proceedings, take that risk. Because then 140 and 143 has come, it flies, it goes off in the air, evaporates into thin air, it goes away to faceless now. So I cannot tell him to take the risk. 400 crores additions will be made. Or they may accept in faceless, I don't know. They may accept. If they do not accept, 400 crores additions will be made. What will happen? He will lose his peace of mind. Then unnecessary has to file an appeal. And the appeal, NFSC, 8 years, 10 years, they are still pending, sir. Because appellate authorities are heavily overburdened. I mean, they are not taking up the cases for hearing at all. Madam has promised that out of the 5.5 lakhs plus appeals, next year I want it to be reduced to at least 50%. So again, the appeal would increase. Then board secretary will tell me you pay 20%. Then I have to go begging before the principal chief commissioner or principal commissioner, sir, I cannot pay, genuine hardship. Please, analyze the case. Please appreciate the facts of the case. No, sir, matter is sub judice in court. It is with NFSC appeals. We have it due respect, sir. But this is the problem. In fact, I was one of the fortunate ones to be taken from KSCAA. I could appear before the select committee. I had an occasion to sit beside the chairman of the selection committee, chairman, in that Taj West End. KSCAA took me there. And I just sat with him. I gave him a suggestion. Mr. Chairman, 250 subsection 6 capital A is telling the CIT appeals may where it is possible. May where it is possible. Call for the case for hearing and dispose of within 1 year from the end of financial year in which appeal is filed. So he told, what do you want to do? Sir, do you want to extend time limit? No, sir, I do not want to extend any time limit. He told, we have received representation all over India. You make it 6 months or increase it to 2 years, etc. Sir, I don't want you to tinker with the time limits at all. My humble request is that may you make it shall. You dismiss it. I will go to tribunal and get the relief. You do not want to act upon the case at all. Case itself is not called for hearing. Or 7-8 notices have come. I filed all the written submissions. They are still, taking the decision. So where it is possible, may, instead of may, you please make it shall. He told, okay, very good suggestion. You don't want to extend time limit? Absolutely no, sir. I only told remove the word may, put shall. That's all. That is my humble request. Otherwise, these appeals are not getting disposed. They are there forever and forever and forever. When the client asks us, sir, what will happen? When will it happen? I don't even know him, sir. I have not even seen his face. It is there in the thin air, evaporated in thin air appeal. How do we know? What do we tell the client? Yes, sir, it will be taken up for hearing. Even, my dear friend, the next issue is coming now. When they issue notice, what will they do, sir? Will they send you SMS or will they send on a mail or will they send on the portal? Don't tell me on the portal. You can manipulate somehow and put the notice on the portal. You have to send the notice on the mail. What about correct mail, incorrect mail, old mail, supplementary mail, primary mail, mail of the chartered accountant? There are matters, all these matters have reached high courts. High courts are telling what do you mean by service. Service of the notice should be on the correct email, not on the wrong email ID. Or check the return, check the latest return of the SSC. See what is the email ID. If you serve on the wrong email ID also, courts have quashed such orders. So this is also food for thought. This is also this also as a ground of appeal or matter of writ, if you can prove it. You can't tell you just served on the portal. Courts are telling portal, anybody will serve. I have not seen the portal. Did it come to my mail? Did I receive a message? I would have received a mail, but it may be, the earlier CA or earlier tax consultant, earlier accountant, he has left me. I do not know. Or I have updated my mail, I have put a new mail, but your people continue to serve on the old mail. So all these are food for thought. Secondly, what about sanction? Where principal commissioner should give, principal chief commissioner should give sanction, additional commissioner should give, joint commissioner should give. If you goof up there also, null and void. Supreme Court decisions are there. We will see now. This is the next issue. Again, information suggesting that income has escaped assessment. What are the types of information? Only 5 types of information. What are the information? We will see that. These are all the types of information. And the main thing is the assessment or the reassessment. Yeah. So if you see the section now, 147, this is the 25 and 24, both are same, sir. This is the 23 earlier. So first section 145, 147 is the same. Any income chargeable to tax in case of an assessee. Any income chargeable to tax. Sir, section beginning 3 words, you don't have respect at all. Income chargeable to tax. When clearly it says income chargeable to tax has escaped assessment for any assessment year. What do you mean by the word assessment? Assessment in 2 within bracket 40. Regular assessment means an assessment made on 143.3 or 144. 2 within bracket 9 means assessment includes reassessment. So is it not that first time you are filing return or assessment should be over? Escaped assessment for any assessment year. Then assessing officer, if you don't file the return, you would have received a notice under 142.1. If you don't respond to 141, don't file the return, you would have got a best judgment assessment. Assessing officer may subject to the provisions of 148 to 153. Follow that. Follow 148 to 153. Assess or reassess such income. Assess is fine. Reassess is what? Reassess is reassessment. Already assessment has taken place. Reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction. I gave you in the very first slide that allowance or deduction. All fraudulent exemptions and deductions what you claimed at 1013A, 80GGC, 80E, 80D, 80EE, 80EEB, 80G, 80GGA, 80DDB, etc. Everything will come here, sir. And it will be reassessed again now. It will call for a reassessment. Assess or reassess such income or recompute the loss. What if it is only intimation? Only intimation is passed. Rajesh Javeri for the Supreme Court. Intimation is not assessment. Assess or reassess such income or recompute the loss or depreciation allowance or any other allowance or deduction for such assessment year. Then explanation to 147 what it says. For the purposes of assessment or reassessment or recomputation under this section, the assessing officer may assess or reassess such income. Fine. In respect of any issue which has escaped assessment and such issue comes to his notice subsequently in the course of proceedings under this section, irrespective of the fact that provisions of 148A have not been complied with. Meaning to say, Kamlesh had income from house property. He had 3 houses. One house is in Shimoga, one house in Bangalore, another house in Mangalore. So one house in Shimoga, Bangalore, Mangalore. Department information escaping that, suggesting that income has escaped assessment is house at Mangalore. They record that, this information is what? Kamlesh income from house property escaped assessment at Mangalore. Then they come to know it is also at Bangalore, also at Shimoga. So what to do? Ultimately, they say, what is the basis for reopening, sir? Information at Mangalore. So Mangalore, when they say, no, this is filed, by mistake, he wrote the wrong address. So Mangalore, actually income is declared. So the primary information is already out. Secondary information is there. Yes, I have not made an addition on the primary information, based on which information suggesting that income is escaping assessment. Can I take this issue now that you did not make an addition on the primary reason for reopening, but now you are telling income? Fine, there is definitely that income at Bangalore, income at Shimoga, house property escaped assessment. I am going to make an addition, but the reason, the information based on which I reopened, that is the house property income at Bangalore, has already suffered tax. So what the law is telling now, in respect of any issue which has escaped assessment, such issue comes to his notice subsequently in the course of proceeding, irrespective of the fact provisions of 148 have not been complied with. Earlier I would have gone scot-free, sir. So I had ran back, see, Delhi High Court. I had, this Bombay High Court judgment also. I mean, your Bombay High Court, Delhi High Court, often. So now this clearly it says, irrespective of the fact provision of 148, it have not been complied with. Then 148 subsection 1, it says, before making the assessment, reassessment or recomputation, assessing officer shall, subject to the provisions of 148A, issue a notice along with copy of order passed on 148A3, nothing, your 148AD along with 148. Earlier it was 148AD, sir. 148A, conduct inquiry. 148AB, show cause notice. 148C, consider the reply of the assessee. 148AD, pass an order after considering all the material available on the file of the assessing officer plus reply received of the assessee. Ditto. See the important change, because lot of writ petitions to High Court. My person is sitting beside me, he would dole out at least 25 case laws. What was the earlier time period? 3 months from the end of the month in which notice is issued. Understand the time limit, sir. What was the time limit earlier to file return under 148? Within a period of 3 months from the end of the month in which such notice is issued. Now they are telling not exceeding 3 months. Why? Earlier they gave time period 60 days, 80 days, 90 days. I went and filed it. I went to Amar Akbar Anthony, filed it now. That is how I told you. First site, then house. First floor, second floor, third. Period of 3 months from the end of the month in which such notice is issued. Now it says not exceeding 3 months. What was earlier 80 days? Gone. Writ petition. When the law is telling period of 3 months, why are you giving me 80 days time? Now that period of 3 months from the end of the month in which such notice is issued, replaced by not exceeding 3 months from the end of the month in which such notice is issued. That is all. They are cutting down on all the litigation or return of income or of any other person respect of whom is assessable under this act during the previous year corresponding to the relevant previous year. Please understand this carefully. Return of income or income of any other person in respect of whom is assessable under this act during the previous year corresponding to the relevant assessment year. Suppose I gave a gift to my wife. I gave a house property gift to my wife. That house property is sold. So who has to tax her? Because of the clubbing provisions, husband has to pay the tax. So because of clubbing provisions, wife's income will be taxed in the hands of the husband. That capital gain will be taxed in the hands of the husband. Now the issue for discussion is deceased. Person is deceased. I did not inform the department. Department didn't know this fellow is deceased. Neither I wrote a letter, nor I mailed to the department, nor I informed the officer. What do officer know? He will issue a notice. I am not informed the department. What I will do? Now the deceased assessee sold a property. Now as a legal heir, I want to claim exemption on 54, 54F, 1 year before the date of transfer, 2 years after the date of transfer, 3 years for construction. So I will invest the asset or 6 months, 54 easy bonds. So the legal heir would invest all the property sold by the deceased. Legal heir would make the investment 54, 54F, 54 easy, etc. and file the return in his name because the investment is named in the name of the legal heir. Notice will go to the deceased. Sir, you sold property. What happened? Not declared. Deceased. He's no more. How can you issue notice on the dead person? Is the legal heir responsible? Courts have come down heavily, sir, on the department. How will you issue notice? Where will you issue the notice? And where will be served? Anyway, move forward. First proviso to 148.1. Provided no notice under this section shall be issued unless there is information with the assessing officer. Law is crystal clear, sir. No notice shall be issued. Proviso to 148.1 unless there is information. Which information? Unless there is information with the AO which suggests that the income chargeable to tax has escaped assessment in the case of assessee for the relevant assessment year. Now, second proviso. Provided further where the assessing officer, I am only discussing about the new, Finance Act 25 only. Wherever there are some changes compared to 23, 24, 25, we will discuss. Don't worry. Provided further where the assessing officer received information of the scheme notified under 135A, no notice under this section shall be issued without prior approval of the specified authority. So second proviso is telling wherever there is information under the scheme notified under 135A, no notice under this section shall be issued without prior approval of specified authority. Now notice will come after taking approval. Earlier what they were telling, sir, now even 135A, I will give you some judgments. They are telling, so what? 135A, you are telling 135A, you have given information. I will not follow provisions of 148 ABCD in that context. Courts are telling nothing doing. You have to give opportunity. You have to issue show cause notice. Give the details to the assessee. Take the reply from him. Even though it is under 135, I will give you judgments. It is only for 148 ABCD. Now it's telling to issue this. No notice and section shall be issued without prior approval of the specified authority. So even that judgments will give you. Next. The return of income required under subsection 1 shall be furnished in such form and verified in such manner, setting forth such other particulars, and the provisions of this act shall apply accordingly as if such return were a return required to be furnished under 139. All provisions of 139 would apply. To the extent, proviso to 148.2. Provided any return of income required under subsection 1 furnished after expiry of the period specified in the notice shall not be deemed to be returned to 139. If you furnish a return after the expiry of the period, they would have given what they gave. What is the period, sir? Now, not exceeding 3 months. So you are telling 3 months are over, 4 months are over, but online I can go and upload. You upload, you will get acknowledgement number also. But they are telling this shall not be deemed to be returned under 139. What is the meaning of this? I declared 1 crore undisclosed income under 148. If it is a valid return, then they may tell, okay, as per information, 1 crore, you declared 1 crore, fine. I will not levy penalty. Don't worry, there are ample tribunal judgments which say returned income and your assessed income both are same. I will not levy penalty. Let the assessing officer levy penalty, don't worry. Let the CID appeals levy penalty, don't worry. Ample judgments at tribunal level, high court level, where they say the returned income, assessed income is same even though 148. But the problem here is they are telling I will not consider a return valid because it is filed beyond the time given in the notice. So they are telling I am not going to consider the valid return. So very important that 1 crore is not declared, although you paid the tax. Department cannot issue 143.2. Why? There is no return. Up to June, they can issue 143.2. In this case, department cannot issue 143.2. Why? There is no return at all. Shall not be deemed to be a return under 139. No question of 143.2. So what to do? 144. Order will be passed under 144. Although you declared income, you filed the return, you paid the tax, and 1 crore you declared income. But they will pass an order under 144. Be careful. This provides out to 148.2. Next, 148.3. Now here they are giving you the meaning of information for the purposes of this section and 148A. Information with assessing officer which suggests that income chargeable tax escaped assessment means any information according to risk management strategy formulated by board from time to time, any audit objection that assessment has not been made in accordance with provisions of this act, information received under agreement 1990A, information available to AO scheme notified under 135A, information action which requires action in consequence of order of tribunal or court. Then any information, be careful, sir, be very careful. In any information in the case of assessee emanating from survey conducted at 133A, you will have to file returns now, 3 years. It is not 1 year survey. Information comes, then 3 years they can call for a department. Other than under 2A means what? Your TDS survey. On and after first day of September 24. So 5 for this. These are the 6 types of information. Any information in the case of assessee emanating from survey under section 133 other than 2A means, other than 133 means other than TDS survey. On and after first day of September 24, I told you there is a cutoff there. Up to 31st August, even search was, merged with the reassessment. Search is hived out now. Now, 148A1, where the assessing officer has information which suggests that income chargeable tax escaped assessment in case of an assessee for relevant assessment year, before issuing notice on 148, he will provide an opportunity of being heard by serving upon him a notice to show cause as to why notice on 148 should not be issued, and such notice shall be accompanied by information which suggests that income chargeable tax escaped assessment. What is that information? You give verbatim copy, sir. You are relying on an investigation report. You are relying on statement recorded in the course of search. You are relying on some information received in the course of third-party search, satisfaction note. Give me all that information. Along with that notice, just take that information and attach. What is the problem with you? Why you don't want to give the information? Just as it is you attach. Such notice to show cause shall be accompanied by such information which suggests that income chargeable tax escaped assessment. Then 148A2 says, on receipt of notice under subsection 1, assessee may furnish reply within such period specified in the notice. Now, thereafter 3 is telling assessing officer on the basis of material available record and take into account the reply, he will pass an order along with prior approval of the specified authority. Only 2 authorities now, 151. Only 2 authorities. Determining whether or not it's a fit case. What was 148A-D has now become 148A-3. Then 148A4 is crystal clear. The provisions of the section shall not apply to income chargeable to tax, escaping assessment for any assessment year in the case of an assessee where the AO has received information under the scheme notified under 135A. Why? Faceless collection of information. Under 135A, already they have given you information. But you people have not bothered to check on EAS, TAS, etc. Go and check there. 133.6 3 times should have received. 3 times they send. After that, the inspector also will call you. And then there is a, some tree, that red color. What is it called? Some signal will come, that tree, red color. So that you will have to mandatorily reply. Yes or no. Now, I have received recently in my all assessee cases, when we reply, 135A, they are telling they have rejected this. We have received the, again, message from the department. Rejection. We are rejecting the source. So again, we have to reply by giving the correct. We used to reply what? The different pan, etc. does not belong to me, etc., etc. So they may accept or they may reject. Now they have rejected in certain cases. It has come back. So again, you will have to reply to them, mail to them, etc. Where is this office 135A? From where it comes, sir? Project Insight Portal, etc. INCAA, your Unity building. Next, move forward, sir. 148B, no order of assessment or reassessment, recomputation of this act shall be passed by an assessing officer below the rank of Joint Commissioner in respect of an assessment year to which clause 1 or clause 2 or clause 3 or clause 4 of explanation 2 to section 148 apply, except with the prior approval of additional commissioner, additional director, joint commissioner, joint director. Excellent. This is the drafting of the act. To which clause 1, clause 2, clause 3, clause 4, explanation 2. Open your act and see. In the new regime under 148, where is explanation 2? Is it there, sir, explanation 2? In the new regime, 148B is telling no order of assessment, reassessment shall be passed by an AO below rank of joint commissioner. Fine, sir. In respect of an assessment year to which clause 1, clause 2, clause 3, clause 4, explanation 2 to 148 apply, except with the prior approval of additional commissioner, additional director, joint commissioner, joint director. So under 148 now, where is explanation 2? Under explanation 2, where is clause 1, clause 2, clause 3, clause 4? Where is it? Yes, sir?
There are no explanations, sir.
Do not worry, we will take all the questions, put everything in the chat box. Now don't disturb me putting the chat box. At the end, we will take all the questions. Provided you are ready to sit for half an hour, I will extend my stay for half an hour. Come back. Now we will extend 149.1. 149.1, no notice under section 148 shall be issued for the relevant assessment year. I told you now, 3 years and 3 months. Earlier it was how much, sir? 3 years. Now 3 years and 3 months. Why? Not exceeding 3 months. You remember that, not exceeding 3 months. So that time limit is fixed here. 3 years and 3 months have elapsed from the end of assessment year unless the case falls under B. What a beautiful amendment. If 3 years and 3 months, 149B, not more than 5 years and 3 months. We are very happy. Up to 5 years only you can reopen. Now, if 3 years and 3 months, not more than 5 years and 3 months have elapsed from the end of relevant assessment year, unless even this beyond 3 years, very difficult for the department to reopen. Unless the AO has in his possession books, other documents or evidence related to any asset. What was an asset earlier? See how the jurisprudence has flown now. Much river has flown, sir, in the Ganga. Books of account, documents, evidence related to any asset, expenditure, transaction or entries which show that income chargeable. Earlier what, sir? Which reveal that income chargeable tax represented in the form of an asset. Represented word is out. Now comes what? Represented in the form of reveal. Reveal what was there? Reveal is out. It says related to any asset. What was an asset? Any asset. Expenditure in respect of a transaction or in relation to an event or occasion. Event or occasion, out. Their word is not there, sir. In respect of transaction, not there. Expenditure or transaction. In relation to event or occasion, out. Or entries. Entry or entries. Entries out. Entries which show income chargeable to tax. What do you mean by entries, sir? What is entry? Entry in your RCB match? Or entry in KSCAA? Or entry when the CM came in front of this one, Vidhan Soda. This entry is entry in the books of account. What is entered in the books of account, you want to treat as income, which has escaped assessment. Related to any asset or expenditure or transaction or entries. Which entries? Which show that income chargeable to tax has escaped assessment. I took a loan from unsecured creditor. You are telling this entry, this bogus. Purchases are there, entered in the books of account. Bogus purchases. Cash credit. The word cash credit is not there, sir, in the new bill. I will not want to confuse you now. So section 68. Cash credit, section 69, unexplained investments, which show that income chargeable to tax. I purchased a property. Below guideline value, 56.2 within bracket 10. I purchased a property whose guideline value, stamp duty value is 1 crore at 80 lakhs. That 10% is not there. You mean to say what is that asset or transaction entry show that income chargeable to tax or 43 CA or 50 C. 50 C. Income chargeable to tax, which has escaped assessment, amounts are likely to amount to 50 lakh rupees or more, matter ends. Yes, Kamlesh purchased an asset beyond 3 years, 1 crore guideline value, 80 lakhs cost, 20 lakhs, yes. Unfortunate, sir. 50 lakh. It is not exceeding 50 lakhs. So nobody can catch him now. He will go scot-free beyond 3 years and 3 months, but not more than 5 years and 3 months. So 20 lakhs, you cannot catch him. This is the law. Related to any asset or expenditure or transaction or entries. Move forward, sir. 149.2. This is what? Time limit for notices both for 148 and 148A. So same thing, sir. 148 will be 3 years, 148A will be 3 years from the end of relevant assessment year unless falls under B, 3 years but not more than 5 years. Unless that income exceeding, likely to exceed 50 lakh rupees or more. Now, specified authority for purposes of section 148 148A shall be the additional commissioner or additional director, joint commissioner, joint director. That's all. They are very well simplified now. What happened? Why? Sir, writ petitions were filed in a court of law. Hey, Mr. Principal Chief Commissioner of Income Tax, Omar Akbar Anthony, they filed a writ petition. Come on, show me. You are the Principal Chief Commissioner. Show me the sanction copy. Show me the approval copy. You have given approval to 256 cases in one day. How is it possible? Mechanical, non-application of mind, without jurisdiction. Simply approved. With due apologies and due humility, at all my humility at my command. The courts have come down heavily and they are telling 256 approvals you gave in a single day. You did not even sign the approval, use that digital signature. You may not even be there on the seat. Your officers have just affixed digital signature, uploaded. The time comes, sir, now. Time. Be careful now. It is issue versus service. 148 talks about issue and service on 12 o'clock night, 31st of March. Date of issue, date of service. But see the time now. Time comes in the notice. What time uploaded? 12:30, 12:41, 12:42. Be careful there. So we don't know. It has come there in the portal on first. So what will happen? Again, unsigned. Again, DIN number is not there. There is no DIN. So what to do? You cannot tell me why should I go to Supreme Court. Matters have gone to court, sir. High Court, no DIN, quash. No signature, quash. 31st date, served on first, quash. Again, 148 AP. They will tell, I want to tax house property income, Kamlesh. House property income, Mangalore, etc. 148 AD, you come. They will tell, no, Bangalore is already taxed. I will tax Mangalore. No. 148 AD. When I come to 143.3, they will tell, I will tax the house property at Calcutta. 148A, B, earlier to D, variation. Again from D to 143, variation. So courts have come down heavily. Mechanical, without non-application of mind, without application of mind. All these are still there, sir, ingrained in the statute. There are judgments. I have shared some judgments also. Even those judgments are readily available. Again, I am telling you, car specialty citing. You are telling me I cannot claim a fresh deduction in the course of 148 proceedings. I will claim. I have a judgment, car specialties. I will claim. Don't tell me the judgments which are against. I have only given you the judgments for. Omar Akbar Anthony has to prosper, sir, in life. Because 2 houses are exempt. Only 1 house we have taken. 1 more house you can take. Move forward, sir, now. Move forward and come to 151A. Faceless assessment of income escaping assessment. Please understand, there is a statute. In the statute, there is a section called 151 capital A. What is the heading? Faceless assessment of income escaping assessment. Why you are issuing notice? Then, jao. Again, I am telling you, same thing will happen, sir. Same thing. Will the Supreme Court tell all the notices issued by jao are hereby quashed? All assessment quashed. So what will happen? Already people are telling me, sir, Article 142 is there, sir. Discretionary power will be invoked. Article 142. We don't know, sir. You cannot tell all the notices issued by JAO shall be deemed to be issued by FAO. We don't. Because the department continues despite all the high court judgments, they continue to issue the notices by JAO on the grounds that SLPs are pending and department was not accepted. So this is the again big problem. Unfortunately or fortunately, it will be solved only at the Supreme Court level. So the litigation will continue, sir. Please take this ground. Please take this ground always. Fao jao ground. Not taken, please take it additional ground. At least if you file a writ, no, you will get stay immediately. If your case is fully weak, as you are filing writ, take fao jao, get the stay. Immediately you will get stay at the High Court. Anyway, so 151A1, central government. Why I want to take you through this section? Because this gives the power for faceless assessment of income escaping assessment. From where this all litigation started, will reach Supreme Court now. The central government may make a scheme by notification official gazette for the purpose of assessment, reassessment, recomputation, or issuance of notice under section 148, or conducting of inquiries of show cause notice. Conducting of inquiries is there, but there 148AA is deleted. Please understand. It is done away with. Here still it is telling conducting of inquiry is there. I am connecting sections now. Or issuance of show cause notice, passing of order under section 148A, no problem. Or sanction for issue of notice under 151, impart greater efficiency, transparency and accountability. Very beautiful word, sir. I can't talk about the implementation at ground level. Eliminating the interface between income tax authority and technology, and the assessee or any other person to the extent technologically feasible. Optimizing utilization of resources through economies of scale, functional specialization. Introducing team-based assessment, reassessment, recomputation, or issuance of sanction of notice. Dynamic jurisdiction. It is there in the statute. I am not telling it. Move forward, sir, now. Let us move forward and now. Yeah, this 152, okay. Only I want to take you to 152.3 and 152.4. So 152.3 is clear, sir. Search has been initiated at 132, requisition made under 132A, survey conducted at 133A, other than 133.2, that is tedious survey, on or after 1st day of April 21, before 1st day of September 24, that is up to 31st August. Only up to that, only provisions of 147, 151 shall apply, as they stood immediately before the commencement of Finance Number 2 Act of 2024, matterance. Thereafter, this reassessment provisions will not apply to the search provisions. Again, 152.4, where in a case other than covered under subsection 3, a notice under 148 has been issued or order under 148 AD has been passed prior to 1st day of September 24. The assessment, reassessment, recomputation in such case shall be governed as per the provision of 147 to 151, as they stood immediately before the commencement of Finance Number 2 Act 2024. No question of any confusion. Don't tell me which new regime or old regime. Clearly is telling before 1st day of September, 148 is issued along with 148A D order. So it will be governed by the old provisions only, 147 to 151, as they stood immediately before the commencement of Finance Number 2 Act of 2024, issue number 1. Now, in this case, the assessing officer issued reopening notice 21st March, assessment year 16-17, against assessee on ground that long-term capital gain of 55 lakhs on sale of property escaped assessment, since assessee claimed that long-term capital gain on sale of property is only 33.85 lakhs. And view of the facts, amount mentioned in registered conveyance could not be straightaway taken as income escaping assessment without deducting cost. So, in the reasons recorded, the information, you took 55 lakhs, which is the sale consideration. Obviously, why? Because, earlier provisions, 3 years and 10 years. Beyond 3 years, up to 10 years, more than 50 lakhs. Straight away take gross sale consideration without allowing the cost. Sir, what is the section, sir? Income escaping assessment. You are taxing the gross sale consideration. What to do? Sanat Kumar Murli, 172 taxman.com, 290, Karnataka High Court, dated 10th of February 2025. Courts have come down heavily on the department. They are telling single judge High Court opined that entirety of sale consideration should not be taken into account. What are the words found in 149? It is only income chargeable to tax. It should be read as income in terms of capital gain as provided under section 48. Therefore, the Honorable Judge set aside the impugned reopening notice. Amount mentioned in the registered conveyance could not be straightaway taken as income escaping assessment without deducting cost of acquisition. So what is the judge telling now? If you see, what is the judge telling? That merely because the concerned conveyance mentions 55 lakh, that cannot be taken as income escaping assessment, in as much as the cost of acquisition is to be deducted from it, and if that is done, it would fall below the ceiling limit of 50 lakh rupees. Karnataka High Court is also relying on division bench of Madhya Pradesh High Court sitting at Jabalpur Nitin Nema's case 2023 155taxman.com Madhya Pradesh. Now, and they also go on to further tell, Honorable Single Judge further tells that the challenge to Jabalpur bench has attained finality at the hands of Apex Court in special leave petition number etc. 17924. So now what is he telling again? Broadly, we are in agreement with the views of the single judge to the effect that while assessing the quantum of escaped income in matters like this, amount mentioned in registered conveyance cannot be straight away taken without deducting cost of acquisition. Again, this is one more example. This is Nitin Nema, what I told you, Madhya Pradesh. Here what happened, sir? This is delivered on 16th August 2023. Don't worry, I will share this presentation with Deepak and he will do the needful. Sir, in this case, revenue has misinterpreted gross sale consideration of 16 scooters. Fellow sold 16 scooters and gross sale consideration, they took it as chargeable to tax, on the ground that the amount received on the sale of 16 scooters, you did not offer to tax. What are they telling? 16 scooters I sold at 72.05 lakhs for 16-17. Therefore, again, the Honorable Judge is telling income chargeable tax is not defined in the Act. It's different from the income under 2 in bracket 24. Income chargeable to tax, how to arrive at it? You deduct all permissible deductions. Then you arrive at the quantum of income, which is invariably more than income chargeable to tax. And assessee has submitted details of items sold, amount received, computation of total income, computation of tax on total income during the course of proceedings. Then he has come down heavily. He is telling revenue failed to understand the fundamental difference between sale consideration and income chargeable to tax. And this elementary mistake, beautiful language, sir. Elementary mistake of the revenue led to assessee's harassment, compelling him to file present avoidable petition. Whether since court has been compelled to decide instant frivolous matter, wasting its precious time and energy. I am explaining to you difference between gross and net. Court is telling you wasted my time, precious time and energy, which could have been utilized in more pressing matters. Revenue deserved to be saddled with exemplary cost. Correspondingly, assessee also would be entitled to compensatory cost. So the court has, levied cost. You see para 9, how beautiful it says. What comes out loud and clear is that the revenue has failed to understand the fundamental difference between sale consideration and income chargeable tax. The revenue, despite being assisted by thousands of experts, I am not telling, sir, court is telling. Revenue being despite assisted by thousands of experts in the field of finance and taxation, has committed such an elementary mistake, leading to harassment to the assessee who has been compelled to file the present avoidable piece of litigation. So what is the cost levied, sir? Revenue is saddled with cost of 25,000, out of which 15,000 shall be credited in favor of MP High Court Employees Association Jabalpur. Remaining 10,000 shall be paid to the petitioner through digital transfer in his bank account within a period of 30 days. Fine, sir. So this same issue which continues. There is one more Bangalore tribunal judgment delivered in the case of Mudigundam Srinivas Murthy Manjunath, 24th April 25. What is this problem again? All of you have faced this problem, sir. Sale consideration. I am joint owner. Department tell you are the only owner. Tax everything in your hands. But you are telling I am joint owner. That fellow also has filed return of income. You are thinking only you will see my 26 years. You check my 26 years, etc. I have received only proportionate sale proceeds declared in my return of income, also reflected in 26 years. Fact of joint ownership, proportionate receipt was also part of very information on the basis of which revenue had initiated proceedings 147. Despite the fact that revenue erroneously attributed the entire sale considered 4.91 crore to associate, concluded that he had suppressed income. Remarks that revenue IDIT Bangalore is coming down heavily. They are taking revenue approach factually and legally untenable, unsustainable. Move forward, sir. This is the issue 2 again, legal error of the assessee, which we discussed. Availed exemption under 54 by placing fixed deposits in the name of legal heirs under CGS, since amount invested by petitioner out of sale consideration received by late assessee in their name being legal heirs was in accordance with the conditions provided under 54. Assessing officer could not have reopened assessment on the ground that investment made in name of legal heirs to claim exemption under 50 would result into escapement of income. Lata Kamalbai Shah, late Kamalbai Shah, etc., legal heir versus National Faceless Assessment Center, Delhi, High Court of Gujarat, 23rd June 25. Amount invested by petitioner out of sale consideration received by deceased in their name being legal heir was in accordance with conditions provided in 54. Assessing officer could not have assumed jurisdiction to reopen assessment on the ground that only because investment was made in name of legal heirs to claim exemption 54 would result into escapement of income. Yes. Court is coming down heavily based on Honorable High Court of Andhra Pradesh, rendered way back, sir, in 1986, Mir Ghulam Ali Khan, 1986, 28 taxman, 572, Andhra Pradesh. Move forward, sir. What are they telling? You see, para 8.2, relying upon the expression assessee, the department's argument, there is expression assessee in section 54. So, contended by department that in order to claim exemption, the person who sold the house must be the same person who purchased the house. That is, the assessee must be the one and same person who purchased, who sold, identity must be the same. Court is telling we are unable to accept this contention. Object of granting exemption under section 54 is that a person who sells a residential house for purpose of purchasing another convenient house must be given exemption so far as capital gains are concerned. As long as the sale of the house and purchase of another house are part of the same scheme, the lapse of some time between sale and purchase makes no difference. Court is also telling assessee must be given a wide and liberal interpretation so as to include his legal heirs also. See this beautiful lines again. There is no warrant for giving too strict an interpretation to the word assessee, as that would frustrate the very object of granting exemption. And what is more, in the instant case, the very same assessee immediately after sale of house entered into an agreement for purchasing another house and paid a sum of ₹1,000 as earnest money, and subsequently the legal representative completed the transaction within a period of 1 year from the date of death of the deceased. The sale and purchase are two links in the same chain. We are fortified in this view by decision of Madras High Court in C.V. Ramanathan. So, court is relying on C.V. Ramanathan. They are also relying on Mir Ghulam Ali Khan, High Court of Andhra Pradesh. And this is Kamal Bhai Shah versus NFAC, High Court of Gujarat, delivered on 23rd of June 25. Very simple. Move forward, sir. Now, this is general information derived from report of the investigation wing. No specific information regarding petitioner's involvement. Every time you are getting information from the wing, make addition. Without applying your mind, without independent investigation, without doing your research, without doing your analysis. Just take the report, make addition, don't even share the report. I have to go to court, then, call for the report. Then again, necessary that AO has reasons to believe based on tangible material that has live nexus with the belief that income has indeed escaped assessment. Concluded and closed assessments cannot be reopened merely on suspicion. Sanjay Kaul versus ITO to 2025, 175taxman.com, High Court of Delhi, 30th May. So what is happening in this? Assessee has traded in shares of two companies, IISL and SRK. IISL and SRK. Information was received by assessing officer from the wing that IISL is a penny stock and it is being rigged to provide bogus accommodation entry to beneficiaries. Okay. Further, regarding SRK, assessing officer say SRK was flagged as one of the BSE listed penny stock company in the investigation report circulated from the principal DIT investigation. Fine. On the basis of the same, reopening notice was issued on the ground that assessee has claimed bogus short-term capital loss on penny stock to evade tax liability. It was noted that the information on the basis of which reassessment notice was issued was general in nature. It did not point towards involvement of assessee. Please see the information. Information on the basis of which reassessment notice was issued was general in nature. It did not point towards involvement of assessee in arrangement of providing accommodation entry by contriving bogus short-term loss. There was nothing to show that the information produced above was applicable to assessee. Materials based on which said report was prepared had also not been prepared on placed on record by revenue. Conclusion arrived at by assessing officer was based on suspicion created by information that shares of IISL and SRK were penny stocks. Therefore, the court is telling impugned reassessment notice issued against assessee unjustified and same is to be set aside in favor of the assessee. You see para 27, 28, 29. Merely purchasing, selling of shares by the petitioner would not in itself lead to conclusion that the transactions are fraudulently contrived to secure accommodation entries for evading tax liability. Conclusion arrived at by the AO is based on the suspicion created by the information that the shares of IISL and SRK are penny stocks. Then the court goes on to further deliberate on the issue. However, the said information cannot be sufficient reason for AO to believe, because this is 1415, as it lacks specific material regarding petitioner's income escaping assessment. Impugned notice was issued based on general information derived from the report of Wing and statement of one Mr. Kedia, but no specific information, I repeat, regarding petitioner's involvement in the alleged arrangement for evading tax liability for 1415. Further, the materials based on which the said report was prepared have also not been placed on record by revenue. As also held in CNB Finwis Limited, Delhi High Court, which in turn relied upon the decision of Supreme Court in the celebrated Lakmani Meval Das case. Reason to believe cannot be conflated with reason to suspect. All concluded assessments cannot be reopened merely based on suspicion. We find that there is no tangible material to form reason to believe that the petitioner's income has escaped assessment. So move forward, sir. Now again, this notice issued on the basis of information received from Wing that assessee had deposited substantial amount of cash in his bank account. However, there was no close nexus between tangible material and reason to believe that income had escaped assessment. Information received from the Wing could not be sole basis to form belief that income had escaped assessment and hence reopening notice was to be set aside. This is the judgment of the your Well-Trans Logistics India Private Limited, delivered on 2nd of September 2024, Delhi High Court. What is the court telling here? Same thing, information from the Wing that assessee deposited substantial amount of cash in different bank account. Based on the said information, the courts opined that cash deposited in bank had escaped assessment, the assessing officer, There was no close nexus or live link between tangible material and reason to believe that income escaped assessment. Information received from the unit could not be the sole basis for forming belief that income of assessee had escaped assessment. It was incumbent upon the AO to make further inquiries. You receive report, make further inquiry. You garner further material. If such material indicated that the income of assessee had escaped assessment, then please form a belief. Since assessing officer had not acquired any material to form such belief, impugned reassessment notice against assessee was to be set aside. Again, sir, this is the issue. JK Bullions, Gujarat High Court, 29th of October 2024, Gujarat High Court, JK Bullions, 169taxman.com, 150. Yeah, 590, sorry. Here, what is it, sir? Assessee engaged in business of trading in gold and silver bullion. AO issued reopening notice on the ground that assessee has made cash deposits. He made cash sales without keeping proper documentary evidence identity of the customers. Assessee filed objections containing the same represent cash sales which were deposited in the bank account, duly recorded in the books of account. But however, AO disposed of the objection, total disregard to the explanation given by assessee. Fit case, sir, for it. 45 crores example. In this case, I'll tell you how much. AO had failed to show even prima facie reason to believe as to how information received from the Wing would amount to escapement of income, as there was total lack of formation of reason to believe on part of AO to prima facie, arriving at a finding that it was a fit case to reopen. Reason recorded are cryptic, vague, having no nexus and no application of mind. So the assessee deposited 16.80 crores in the bank account, and the source was out of the cash sales. And one more reason for reopening was during the survey conducted 133A by the Wing at Indore branch of Dhyan Radha Cooperative Credit Society, where assessee received 4.52 crore deposited by various persons in the said cooperative society, which was later transferred to the Axis Bank account of the assessee, all declared in the balance sheet. And then from there, funds were transferred to related parties. So objections were filed that assessee had accounted cash sales in the books and amount deposited in the bank account represented cash sales. Therefore, no addition could be made as an amount to double taxation. An amount received from Dhyan Radha Credit Society was explained that the said amount was in relation to sales made to one Patidar enterprise towards sale of bullion and jewelry. Amount was duly reflected as sales in the books of account offered to tax. However, in total disregard to the explanation given by assessee, the assessing officer disposed of the objections. So now the High Court is telling the reasons recorded, the same are absolutely cryptic and vague. It does not disclose any nexus between information received and satisfaction recorded to form reason to believe that income has escaped assessment, resulting into total non-application of mind by the AO. It is straight law that when the reasons recorded are cryptic, vague, having no nexus, no application of mind, AO cannot assume jurisdiction to reopen the assessment. Even the order disposing of objection is a non-speaking order. Court also says we are unable to understand as to how the deposits made in the bank account would result in escapement of income, more particularly when the assessee has categorically stated in the objections that the same represent the cash sales which deposited in the bank account and duly recorded in the books of accounts. Move forward, sir. 148 issued based on incorrect information received under 135A of the Act. Benai for Vispi Patel, Bombay High Court, 15th of July 2024, sir. This regarding 135A. So, if you receive information 135A department, it is sacrosanct. Is it the Bible? Is it the law? Immediately you will tell, I will make addition. In this case, Bombay High Court is telling information itself was incorrect. Information was not correct, sir. 135A, faceless collection of information. The information referred by the AO was incorrect and interest income from bank deposit correctly disclosed in the return. However, assessing officer, without dealing with the said remarks, issued reopening notice. Whether it could not be conceived that at all material times, information available in electronic mechanism system would be free from errors and defects. You are thinking just because it is coming through an electronic mechanism system, it would be free from errors and defects. Where once a defect was pointed out on information as available on portal, it was the duty of the AO to examine version of the assessee in pointing out that the information was not correct. When electronic information was available under the faceless mechanism and there was other material available, as may be gathered by the AO or furnished by assessee, it would be incumbent on the AO to apply his mind to all such material. Only thereafter take a well-considered view of the matter to issue a notice under 148 by dispensing provisions of 148A. Therefore, the impugned reopening notice was arbitrary and vitiated by non-application of mind. Same must be set aside. Merely because 135A, don't tell me that this is, Bible and this sacrosanct. And I will open the case, I will make an addition. This cannot be free from discrepancies or mistakes. Move forward, sir. To presume that the scheme of section 148 read with 148A and 135A in all cases would operate on defect-free information cannot be accepted. This is what court is telling. It is difficult to accept that every case, any information which is derived from 135A would be sacrosanct and would be free of all defects. Once a defect is pointed out on such information as available on the portal, it would be certainly the duty of the officer to examine whether the version of the assessee in pointing out the information is not correct, would require due consideration for any further action to be taken to issue notice under section 148 of the Act. We find merit in the petitioner's case that such actions could have been avoided by the AO if an application of mind to this effect was to be shown on the earlier occasion. Therefore, the notice issued under 148 is arbitrary and vitiated by non-application of mind, consequently required to be quashed. Now, here again they are telling, while issuing notice under 148, you have attached some information. That information pertains to some other individual, some other assessee. And since that aspect appeared to be an error or mistake and neither deliberate nor willful, no fatality could be attached to the issuance of impugned notice on 148. Monish, Gajapati, Raju, Pushpati. They are telling I will reject it, but you can give the fresh notice along with the correct information. I have no problem. Since such an aspect appeared to be an error or mistake and neither deliberate nor willful, no fatality could be said to attach to issuance of impugned notice on 148. The impugned notice issued on 148 to the extent that it reflected information some other person shall be rectified by respondents. Authority did not apply its mind to objections raised by assessee. Thus, impugned order rejecting objections of assessee was to be quashed. That is different matter. Held yes, partly in favor of the assessee. So again, what are they telling? Petitioner filed objection. The assessing officer issued a notice on 148 on the basis of information received under 135. He attached that information. Petitioner filed objections to the reopening of assessment. That notice was issued pursuant to information collect 135A, which pertained to transaction entered by some other assessee, having different PAN, having no relation with the petitioner. So assessing officer disposed of the objections of the petitioner and held that reopening of assessment was considered lawfully valid and justified. So here the court will not agree. Notice was issued in an absolutely misconceived manner, vitiating the procedure laid down 148. On account of such error, mistake, or inadvertence, no fatality can be said to attach to issuance impugned notice under 148. However, at the same time, court is telling passing of impugned order dated 3rd February 25 is absolutely unsustainable in overlooking the error apparent on the face of the record. On the basis of that incorrect information itself, you passed an order, D order. It can be safely presumed that the authority did not apply its mind to the objection raised by petitioner. Do not worry. Move forward, sir. Now, the issue 5, assessee has pursuant to notice received under 133(6) disclosed that the sales commission was received from a company, and further assessee offered the said income to tax as a part of business turnover disclosed in ITR and processed by assessing officer. Issuance of reopening notice 148 on ground that no reply was filed during proceedings and 133(6) and commission received by assessee was not included in taxable business turnover, not justified. Already I have declared, sir. It is already forming part of my turnover. I have replied under 133(6), but you are telling no. Vishal Garg, the High Court of Punjab and Haryana. All High Court judgments, sir. All recently, say 19/9/24. This fellow is engaged in the sale of medicine and earning commission. Notice under 133(6) was served upon the assessee to furnish information regarding details of contractual receipt fees for professional technical services. Assessee has filed reply disclosing that he had received sales commission from one company, which was duly offered for tax as part of business turnover in ITR. The ITR was also processed. Refund is also received. Assessee was served with reopening notice on 148 on the ground that you did not file the reply under 133(6) proceeding, and sales commission received was undisclosed income. Court is telling amount in question already recorded, including ITR. Same was duly processed by the AO. It was offered for tax as a part of the business turnover. Therefore, 148 issued without application of mind, and therefore proceedings are not sustainable as per law. Now again here, what are they telling? We also find notice dated notice and 148 issued without application of mind stands vitiated on that count. Move forward, sir. Now this issue, proceedings under 148A as also 148 ought to have been issued and proceeded in a faceless manner. Judgment latest Southern Power Distribution Company of Telangana High Court delivered on 10th of June 25 last month. Whether in terms of amendment to act by way of Finance Act 21 with effect from 1st April 21, proceedings under 148A as also 148 ought to have been issued and proceeded in faceless manner. Yes. Whether therefore impugned notice issued under 148A as also under 148 by jurisdictional JAO to be set aside held. Yes. Still the department continues, or even to this day. Assessee contended that notices were not issued in a faceless manner as required by amendment brought to Finance Act 21 with effect from 1/4/21. The assessee relied on the decision of the High Court in the case of Kankanala Ravindra Reddy, 156 taxman.com 178, wherein similar notice were held to be bad in law. Revenue, on the other hand, argued that what? This decision in the case of Kankanala Ravindra Reddy is subject to challenge in SLP before Supreme Court. That's all. Matter pending. Down the line, the court is telling we find same issue has also been decided against the revenue by various high courts. Bombay High Court in Exaware, Guwahati High Court in Ram Narayan Shah, Punjab and High Court in Jatinder Singh, Telangana High Court in Venkatramana Reddy Patola, Bombay High Court in Abhin Anil Kumar Shah. Then again, Himachal Pradesh High Court in case of Govind Singh, Gujarat High Court in case of Mansukh Bhai Dayabai Radadia, Jharkhand High Court in case of Sham Sundar Shah, Rajasthan High Court Sharda Devi Chajar, similar views by division bench, Calcutta High Court Giridhar Gopal Dalmia, everything against the department. This Dadda Pharma LLP High Court of Madras, same things at 24th of June 25, delivered last month. Relying on Bombay High Court in Exaware, same thing. Opined that it was mandatory for FAO to issue notice, and issuance of notice by JAO would make the notice invalid. Then the Department Counsel, special leave petitions are pending against judgment in BMC Software India, Bombay High Court, Exaware, Bombay High Court, Kairos Property, Bombay High Court, and petitions are expected to be taken up after Supreme Court reopens. We follow the law as laid down in Exaware Technologies. It's mandatory. It was held that in Exaware, mandatory for FAO to issue the concerned notices, and issuance thereof by JAO would make the notice invalid. Keeping open all rights and contention of parties, including liberty to apply to this court in case the revenue succeeds before the apex court for revival of this petition. Notice issued in the petition quashed and set aside. This Sharda charger we discussed just now, sir. Move forward. Again, Kairos Properties, same issues are High Court of Bombay, JAO FAO. Move forward. Issue 7 is what? JAO issued reopening notice on the ground that assessee has deposited substantial amount of cash in bank account. Immediate, these bank fellows will flag, sir. Unnecessary, it is flagged. It goes to that, the wing. They will issue summons. They will call for all bank statements. They will ask for the source. They will build up one file. All that file they will build up, and then they will tell, no, I will drop the issue. I will not do anything. 100%, they will again give it to the JAO. They will tell you, reopen the case. So 3 years, 5 years. Why? Bank will flag the information. You will tell 25 crores deposited. I am giving the source, sir, out of repayment of loan, out of the gift received from family members, out of my sales, collection from customers, etc., etc. I have given the source, but they cannot believe. No, 40 crores, push it. They will push it to that project inside portal. Case will be reopened. Information suggesting the income has escaped. Assessment. RMS strategy formulated by board. Finish. Or 135A. Faceless information. Why they are doing that? Why should it be pushed there, CTR, STR? Because what? Unless the assessing officer has in his possession books of account, evidence, documents, which show that, not reveal, which show that income has escaped assessment more than 50 lakhs, what? In the form of asset, expenditure, transaction, or entries in books. That is why they want to build up all the evidence, push it to the JAO, take the approval from your 151 specified authority, reopen the case. JAO could not discard materials and legal effect of orders passed by appellate authority, which prohibited him from issuing impugned notice. What is the case in this, sir? This fellow deposited cash in bank, fine. Case is taken up for scrutiny, fine. Then you know what has happened? Demonetization period, case taken up for scrutiny, additions made. CIT appeals also, after examining the source, has deleted the addition. The JAO has reopened the case for the same year again, telling that substantial cash deposit in bank. He's not even honoring the order passed by CIT appeals. He's not taking that on record. My case was taken up for scrutiny. Additions are made in the course of faceless assessment. And then, again, NFSC has, allowed the appeal. Same thing you want to reopen again. And you are not talking about that CIT appeals at all. Therefore, court has come down in Sam Furniture, Bombay High Court. Not possible. Cash deposit in bank after demonetization, addition under 69A. Thereafter, Commissioner of Appeals deleted the addition. Jurisdictional assessing officer issued reopening notice on the very same ground. Therefore, assessee challenged the impugned reopening notice on the basis of principles laid down by Division Bench of High Court in Exaware Technologies, etc. JAO was aware of the outcome of the order passed by Commissioner of Appeals, wherein issue raised in reopening notice already dealt with, but ignored the same while issuing show cause notice. Furthermore, the Chief Commissioner also accorded sanction under 151 for reopening assessment in a most mechanical manner without application of mind. Whether there would be no justification for AO not to consider, discard, and overlook legal effect of orders passed by appellate authority, held yes. There was a pronouncement of a coordinate bench of High Court on provisions of law, Exaware, etc. Affidavit could not be filed before the court to challenge such pronouncement. What are they telling? We also find quite absurd, court is telling unwarranted, absurd statements are made by JAO when he says the department does not agree with the judgment of this court in Exaware. Because they applied Exaware. Revenue has not accepted the judgment. It would not mean that till the same is set aside in a manner known to law. Noteworthy that this very approach of treating judgments being not acceptable is in the teeth of laws laid down by Supreme Court deprecating such conduct of authorities. In Union of India versus Kamakshi Finance Corporation, Supreme Court in identical circumstances held as under, that is in JAO versus FAO, officers were not actuated by any malafide in passing impugned orders. They perhaps genuinely felt that the claim of the assessee was not tenable and that if it was accepted, revenue would suffer. But what Reddy overlooks that we are not concerned here with the correctness or otherwise of their conclusion of any factual malafides. By passing two appellate orders in regard to the same issue which were placed before them, One of them, those days, collector appeals and other of the tribunal. High Court has in a view rightly criticized this conduct of the assistant collectors and harassment to the assessee caused by the failure of these officers to give effect to the orders of authorities higher to them in the appellate hierarchy. It cannot be too vehemently emphasized that it is of utmost importance that in disposing of the quasi-judicial issues before them, revenue officers are bound by decisions of the higher appellate authorities. The principles of judicial discipline require that orders of higher appellate authorities should be followed unreservedly by the subordinate authorities. Mere fact that order of appellate authority is not acceptable to department itself is an objectionable phrase, and the subject matter of an appeal can furnish no ground for not following it unless its operation has been suspended by a competent court. If this healthy rule is not followed, the result will be only undue harassment to assessee and chaos in administration of tax laws. Move forward, sir. Issue 8. Last issue. This for the CA firm. Where assessing officer issued reopening notice to the assessed CA firm on the basis of information received from CGST authorities that assessee was beneficiary of bogus input tax credit received from an entity. Since the assessing officer has not verified nature of assessee's professional activities with the said entity and further amounts were received by assessee from the said entity, only the invoices issued by assessee to said entity, no other amounts were received. Impugned reopening was set aside. CC Dangi, Bombay High Court, sir, 26/11/24. Assessee is a firm of chartered accountants. Assessing officer issued a reopening notice on the basis of information received from your GST authorities that certain entities, including one F, were engaged in issuing, generating, providing fake bogus invoices for passing off all your fraudulent ITC without supply of goods. And the assessee was also beneficiary of bogus ITC. Who? The chartered accountants firm. Assessee. It is to be noted that the assessing officer completely overlooked that the tangible material form of documents pertaining to professional services. I am renting professional services to the assessee F. All details in this regard as reflected in the books in relation to receipt of fees, TDS amount deposited, also GST amount deposited in the treasury. Thus, the assessing officer not verified at all nature of assessee's professional services activities with F. Information which was gathered by department indicated that F had made payments to assessee. However, there was no material for AO to jump to a conclusion that having received such amount, assessee was deemed to be involved or was a beneficiary of any bogus ITC as being portrayed by CGST authorities. The chartered accounts has only received invoices were given for professional fees, were issued by assessee to F. Accordingly, amounts were received by assessee the said invoices and no other amounts were received. However, it appears that all this was not considered by the learned assessing officer at all. Approach of the assessing officer was totally unfounded for more than one reason. Primary reason being the assessing officer understanding of the GST transaction. Complete misreading of the facts, despite correct facts placed on record by the assessing officer or by the petitioner. A tangible material in form of all documents pertaining to professional services as rendered by the petitioner, all details in that regard as reflected in the books of account relation to receipt of fees, TDS amount, deposit, GST amounts, everything is given, completely overlooked, misconstrued by the officer. We wonder as to how, without verifying the petitioner credentials and merely on the basis of some information which was available with the CGST authorities, without verifying the returns which were filed by the petitioner and supporting documents called the professional fees, how they have proceeded to issue a notice on 148AB. Purely on this information which is gathered under Central Information Management as per RMS strategy now, indicated that Flash Force was engaged in issuing, providing bogus invoices for fraudulent income tax without supply of goods. See, this what is the RMS strategy formulated by board giving this information. It was necessary for the assessing officer to verify the nature of petitioner's professional activities. He did not verify it. Facts demonstrate it is not a fit case where the income of the petitioner escaped assessment on any CGST issue. See para 23. The observations as made in the impugned order passed under 148AD has also shocked our conscience. Further, things do not stop at this when the remark which are made by principal commissioner are noticed. The principal commissioner has surpassed the assessing officer when he makes his noting remarks in according and approval for issuance of notice of 148A. Remarks as made by the PCAT are required to be noted, which reads as under assessee has made bogus purchases from one whole group of entities, etc. In all cases of accommodation entities, purchases are inflated, etc. Firm of chartered accountants which providing to its clients accounting and audit services certainly cannot be alleged to have made bogus purchases from OW group of companies, and in respect of which there was not an iota of material. The petitioner has been alleged of having accommodation entries in regard to these purchases, which are stated to be inflated, resulting in suppression of profits, thereby reducing of taxable income, when there was no ITC whatsoever being claimed by the petitioner. All these remarks being made by the PCIT in granting approval 151 has crossed all limits of legitimacy in the discharge of official duties by Principal Commissioner. Norms of prudent and diligent duty to be exercised by the Principal Commissioner stands breached. Such approval crosses all boundaries of mechanical approach, as also non-application of mind by the Principal Commissioner, who needs to act with more circumstances and seriousness. Further, from the reading of Principal Commissioner's remarks, it is observed that if such high officers, court is telling, sir, if such high officers act with such colossal non-application of mind, amount to an abusing of the authority and powers which are vested in him in law, which is coupled with a serious duty and an obligation to adhere to the correct facts of the case and an appropriate understanding of law in grant of an approval, what can be the plight of the assessee? There is serious doubt whether the concerned PCIT who has granted such approval can at all continue to discharge his duties on such post. This is required to be seriously considered by CBDT in deciding the competence of an officer who is being conferred with such enormous powers. With all due respect, sir, these are the observations of the Honorable Court. The above said observations cannot be overlooked. Such gross non-application of mind, totally irrelevant remarks, which are alien to petitioner's case, has caused serious prejudices to the petitioner, leading the petitioner to knock on the doors of the court. This is not the first time that the court is required to observe on conduct of such Principal Commissioner. Court fit case adopted. Now the court is relying on SAM furniture, namely to direct the concerned jurisdictional officer as also the Principal Commissioner to personally pay cost of 25,000 each to be deposited with the National Association for Blind within a period of 2 weeks. I think I have crossed my time limit, sir. It is already 6:10. I will, share the presentation with Mr. Deepak. And yes, sir. How much time we have, sir?
There are a couple of questions, sir, if we can take them up.
Yeah, not an issue, sir. Please.
So the first question reads, if the first order is issued for assessment year 1819, but the court quashed the order and asked to issue a new order.
Fine.
So to decide the time limit to issue the order under 148A to be decided on the new order or old order. Also, whether the new amendment on time limit can be considered for new order.
No. See, what has happened is, to the extent when from the court, the matter was stayed by the court, that time limit you will have to exclude it, and fresh time limit you will get. That time limit will be excluded from the time period during which there was a stay and court took time to decide the matter. That time limit is excluded. That is in the erstwhile regime, 23, Finance Act 23.
So the next question is for assessment year 1516. For assessment year 1516, notice under 148 was issued on 31st March 2021.
Sir, I understood. 31st March 21, is the income less than 1 lakh or more than, say, 4 years will apply, sir. If it up to 31st March 21, 4 years. See, 1516 means what, sir? Is it coming in TOLA period first? It's coming in TOLA period, 100%, because it is 20th of March, 20th of March 20 till 31st March 21. So it is coming in TOLA period, 1516. So it is extended up to 31st March 21. Less than 50 lakhs means it is gone. More than 50 lakhs, they can reopen. That too, it should be more than that 3 years and 10 years. So earlier at 4 years. 4 years means not possible. You are opening beyond 4 years and 6 years. And then after 21, it is 3 years and 10 years. More than 50 lakhs only possible. Less than 50 lakhs, nothing will be done, sir. Venkatraman has, agreed in this. Para, I think, 65 or, if you see, they have agreed, department, that 1516 beyond 4 years, we cannot reopen.
But I think here in the question, the query says that the notice was issued on 31st March 21. So it is prior to the amendment and it is to be tested under the old law only. The new law shouldn't be applying to this case.
I mean, yeah, TOLA. Huh? So that 4 years and 6 years and 1 lakh, sir, limit. You are right. 4 years, 6 years and 1 lakh limit.
If the vendor does not reply under 133.6,
Yeah.
where that vendor is already taken over by some other company or maybe liquidated, can it be reason to believe to reopen the case?
No, no, see, these are only on facts. Just because, the 133.6 he has not replied, department will definitely tell, and they will make an addition. Then it is up to us to prove it, karke. There are judgments which says merely because, they did not reply to 133.6, you cannot make an addition in my hands when I can prove everything with documentary evidence.
Sir, can you clarify at what stage of assessment does the new regime get applicable? Based on assessment year concerned, date of issue of notice for reopening, date of initiation of reassessment proceeding, or date of order?
No, no, come again, sir.
So I think the query is from the new law which is applicable from 1st April 2021. Is it
Right.
applicable for assessment year 21-22 onwards, or is it applicable for any proceeding after 1st April 21?
Sir, I will tell you, don't get confused. It is only from assessment year Finance Act 21. So it is 1st of April 21 onwards. Means it is from assessment. I'll show you the table also. I think the table where we have prepared, sir. Table is there, I think, and even the I don't know where is that. Just show me, sir, here. No, he has put this, I think. The slides are there, which will clear. Some illustrations are also given, and even a table is given. You can just show them. Yeah.
Meanwhile, we'll just move to the next question, sir.
Yeah, yeah, yeah.
One LLP has not filed income tax return for financial year 18-19 and Section 147 order also uploaded in income tax portal.
Sir, now 1920 is reopened, sir. What to do? Now you file it under 148. File the return under 148 now and declare the correct income. Nothing can be done because I have not filed the return and assessment year 1920 more than the time limit more than 3 years up to 5 years. 3 years and 3 months, 5 years and 3 months. So it's a valid reopening 1920 and then you can see the income and better to file it and come clean. Subject to your income limits also.
I think that's it. We have, sir. There are a couple more questions, but on
Yeah, yeah.
the looking at the paucity of time,
Sure.
we'll probably collect all the questions and then pass it on to you, sir.
Not an issue, not an issue.
So, with this, I take this opportunity to propose a formal vote of thanks. We conclude this insightful session, and it is my privilege to propose the vote of thanks on behalf of KSCA and the Direct Tax Committee. First and foremost, a heartfelt thank you to our esteemed speaker, C. Naveen Khariwal, sir, for an outstanding session. I'm sure this presentation of yours, sir, which you've already declared that it shall be shared and it shall be put up on the KSCA website as well. And I think it's going to be a very sought after material. It can be termed as probably a Wikipedia on 148 and 148A proceeding. Uh, your deep insights and the practical perspectives on the evolving reassessment provisions have truly enriched us all. Thank you for sharing your expertise with us, sir.
Thank you so much, sir.